Hello, Fulshear and Cross Creek Ranch. We're going to look at a couple of more global impacts, more global shocks to the system, and how that impacted the market at Cross Creek Ranch, specifically the resale market. And so, there's a lot going on here, but just to kind of start, we've got mortgage rates, 30-year mortgage rates in blue, and the two biggest shocks that we've had in the last decade really are COVID and then the Fed intervention in 2022 as they increased interest rates. So let's just see what the impact on inventory in orange and asking and sale prices expressed as a price per square foot in dark and light blue. So, initially you see with COVID, it's kind of like any crisis that we had, inventories spike, nobody really knows what's going to be happening, and it was a scary time. So we have a spike in inventory. If you remember the supply chain issues that we had, just all sorts of chaos in the market. And then at some point during that same year, Texas really, became even more of a destination state than it already was. So inventories just collapsed basically through the balance of that year. And then we just had the recipe of an incredibly hot market. So we see the first inversion right here in prices. What normally would be sale prices below asking prices inverted, so that down here, this is the same time frame. Everything in red right here is real estate transactions where the sale prices went higher, sometimes 5 and 10% higher than asking prices, and just stayed red hot, just cooking this whole thing. And you see it still was in the milieu of a very low interest rate environment. And so that continues, and that spike just goes. This thing stays flat. The inventory stays flat. The Fed intervention right here, markets were already anticipating that, and boy, it didn't take them long to really increase interest rates, and it had its effect. It had its effect on inflation, and we'll look at that in another chart. Just wanted to show you kind of some recovery of a little bit of inventory right here, and then we get another inversion where sale prices begin to go less than asking prices in Cross Creek Ranch. This is pretty typical of any market in Texas and how it reacted to these two big shocks to our system. This other chart, I know I'm kind of geeking out a little bit here. This other chart is really more for my purposes, and I know it's ugly. But we're looking at several things at the same time. The orange is the federal funds rate, and I'm not an economist, so I don't really know these terms all that well, but the federal funds rate is here. Here's where the intervention started, and you can see how aggressive they were. The blue is the inflation rate, and I don't know why it took them so long to start that, probably because of recovery from COVID, who knows. So we see, mortgage rates taken off, and I think, the primary target of the Fed funds increase is to see this come down, and what they're targeting right here is going to be 2%. So still have a ways to go. They've leveled off, and haven't really taken any action since August. Who knows? I think they're looking at this probably pretty closely, and of course they want to see it lower. So I don't think we're going any lower. Guess they could raise it. I don't know. But another thing that I look at also is look at the margins on the mortgage rates and the Fed fund rates are pretty darn low here. I think in an environment where everybody kind of knows what's going to be happening. Well, you don't know what's going to be happening here, and so you got big margins on throughout here. So I'm thinking that if things get a little bit more stable, even if they're high, I believe there's room probably for interest rates to get a little closer to the Fed funds rate maybe, and maybe next year we'll see something like in the 6s. I don't know. This is just for me and what my gut tells me. So take that for the 2 cents that it's worth. Thanks for watching.